Hello, I'm Mario Toneguzzi, managing editor of Canada's Entrepreneur. Joining me today on Economics for Everyone episode is Todd Hirsch, an economist, speaker, and author based in Calgary. Thanks, Todd, for joining us today.
Nice to be here, Mario.
Okay, so the world is in turmoil. We got war flashing all over the Middle East. What does that mean right now for the state of the economy? First of all, on a global scale, and then let's narrow it down to more Canadian impact.
Yeah, well, obviously, what's going on in the Middle East is not good. The instability, I mean, this isn't new, by the way. I mean, instability in the Middle East has been ongoing for as long as any of us have been alive.
Yeah.
But the escalation that we've seen over the last 12 days, and now a bit of a pullback by Iran and hopefully some sort of ceasefire, this really disrupted crude oil prices, and that would have had the biggest impact on the global economy, a shock to oil prices around the world. We saw that huge spike in oil prices. Now it's come back down fairly sharply,
Yeah.
but we don't know if the ceasefire is going to hold. Everything I would argue still continues to be quite tenuous.
Now, obviously, the big playing card, especially for Iran, is the Strait of Hormuz, which I understand about 20% plus of the world's oil supply goes through. If that indeed were to happen, that they would block that strait, what would that mean for the economy?
Well, for the global economy, this would be bad news because that 20% of oil supply that comes out of there is mostly OPEC oil, of which Iran is a member, and Saudi Arabia. And OPEC remains, even though it's only about 38 or 39% of oil production globally. So it's not the majority, but OPEC countries are swing producers. In other words, global oil supply and demand is very balanced most of the time. And if OPEC decides it's going to either increase or decrease production, you can see these wild swings in oil prices. So, if we were to see a blockade in the Straits of Hormuz, led by Iran and maybe other OPEC countries, we could see those oil prices, those global oil prices, spiking well above, 80 or even $100 is not unheard of. And that, at this point in the global economy, would certainly be enough to push the global economy into a recession.
Now, what would that mean? Let's take a look at that scenario. If indeed the oil prices skyrocket, what would that mean for you and me?
Well, oil, unlike a lot of other commodities, economists would describe oil as sort of non elastic in demand. In other words, if the price of it goes up, we still have to pay. We really don't, in the short term, most people around the world don't have much option to substitute away to something else. In the long term, maybe they do. But that means if we are paying more at the gas pump to fuel our automobiles, if industries are having to pay a lot more for jet fuel or even shipping fuel, all of these costs have to be paid. That sucks a lot of money out of the economy that could go to other things like, going out to restaurants or travel or any of those things that are a little bit more fun.
Yeah. No, I noted today Statistics Canada came out with the Consumer Price Index, and it was kind of a muted rise in terms of prices across the board. But if oil prices go up, we expect that Consumer Price Index to spike.
Yeah, and that would again put central banks in a quandary again, including the Bank of Canada, which has been watching those inflation numbers come down, and they're looking kind of for, a reason to lower interest rates a little bit. But if fuel prices, especially, were to spike up because of oil price spikes, then that starts to push that consumer price index in the wrong direction. And it's going to make it very difficult for central banks to make a call on if they're going to reduce interest rates or even if they're going to have to raise them.
Hmm. Now, Todd, what does this all mean when we're talking about the oil sector and the impact here? What does that mean specifically for, Alberta and maybe, well, primarily Alberta, but we also have Saskatchewan and, Newfoundland, and a little bit of BC for the oil producers in this country.
Well, because Canada, led by Alberta and Saskatchewan, we are an oil producing country and an oil exporting country. In a very awkward way, we benefit from these higher oil prices. And I've always talked about, it being awkward because we're seeing turmoil in the Middle East, tragic wars, but in a way that benefits our commodity price here in Canada. Alberta and Canada, we are an oil price taker, which means that whatever the price of oil is, that's the price that we receive, discounted, of course, because of pipelines and different things. But the bottom line is Alberta would certainly benefit from these higher oil prices. Individual Alberta citizens, however, we're going to have to pay higher fuel prices.
Yeah.
But higher oil prices is certainly good news for Alberta government and provincial coffers.
And in a general sense, when we look at uncertainty whenever it happens, but specifically now with this kind of uncertainty, what's the impact on business and business sentiment and business investment, all that stuff? Is it kind of just put everything on hold until people want to have more certainty out there before making decisions?
Yeah, it certainly can. Anytime there is a lot of violence around the world, and especially if it starts to hit a little bit closer to home. So I think a lot of people have, in a way, become desensitized to, violence in the Middle East. But once the United States of America starts bombing Iran, then it starts to feel a little bit closer to home for people. And when they read the headlines, there can be this uneasy feeling like, is this the beginning of something bigger? Is this World War
Yeah,
III? And it doesn't do anything positive for discretionary spending and for business confidence because people feel anxious. And when they're feeling anxious, they're less likely to sort of pull the trigger on, oh, that's probably a bad pun, but they're
yeah,
less likely to spend some of their money on those discretionary items like maybe a new house or a new car, things that in normal times they would be spending on, but in anxious times they might decide to hold off.
yeah. Okay, then. Well, thanks so much, Todd, for joining us today.
Thanks, Mario. It's been fun.
Okay, that was Todd Hirsch, a speaker, economist, and author based in Calgary. I'm Mario Toneguzzi, managing editor of Canada's Entrepreneur. Thanks for joining us today.